Hi, my name is Trent Primmer. This is your monthly market update for May, brought to you by our independent research team here at Barclay Pearce Capital. Now, the market as of late's been on quite shaky ground, with the ASX coming off approximately 5% since the end of April. And basically, what has stoked this sell-off in the market is high inflation, which is driving interest rates higher quite aggressively, which is stoking recessionary fears. And that's coupled with the conflict that we're seeing over in Europe, which obviously investors have been seeing in the papers nearly every day between Ukraine and Russia. Now, with the current negative sentiment that we're seeing in the market, we've been moving client portfolios to a more defensive stance. Interest rates obviously being a big theme. You'd normally expect banks to benefit from rate rises as their net interest margins start to strengthen. However, what we're concerned about is the loan books of the banks. And if there's any significant default percentages coming across that, show that Aussies have taken on more debt in a low interest rate environment that now is becoming increasingly difficult to service as interest rates start to increase. In addition to that, with high inflation, cost of living increasing, how hard is it for them to service that debt? That's what we're looking at. So banks, we'd prefer to sit on the fence for now and not touch them until we get some clarity on their loan books and how they're going to navigate this rising interest rate environment. So generally, when cost of living pressures go up, businesses like Coles and Woolies tend to do quite well. We'll expect some uplift in the energy and utility sectors and, of course, consumer staples, as mentioned before, as investors start to move to defensive names and de-risk out of sectors that are obviously negatively impacted by interest rate rises. Now, in saying that, you can make a case for the commodity sector, which isn't really big news for investors. But if you don't have some of that exposure to the commodity sector and you are looking for some good, healthy names to add to your portfolio, Fortescue Metals looks quite worthwhile around these levels. Fantastic dividend yield for investors. Also a focus on renewable energy, which they've shifted to, which is a defensive thematic in and of itself. That was your May market update. For more information, please click the link in the description and we'll see you next month.